I had a great pavilion dinner last night, Sam, with
that's
core
good.
groups. Yeah, it was quite a few listeners were like, "Hey, AJ Bruno in the flesh." And we're like, "Here you on Top Line."
Was
Here
your
we are.
connection good with them in person? Did you have a good
Yeah, it was. My
they
goodness.
could hear you and everything. Were you on camera at the dinner?
I was on camera. I had a robotic iPad that actually just pulled up.
Did they hear every third word?
Yeah.
Is
That's
this
what
every
it's like
third?
for me and Asad right now.
Oh man.
But we know you so well, AJ, that we know what you're saying. Like we can figure it out. And our listeners, they're gangster like that as well.
This is Top Line.
This month's sponsor is Closed, the industry leader in win-loss analysis. The only thing worse than missing quota is not knowing why. Win-loss analysis with Closed provides detailed and unbiased feedback directly from your buyers. So when you're looking for answers, you'll have the concrete data-driven solutions you need to make the strategic decisions with confidence. If you're curious about how win-loss analysis can boost your win rate, give Closed a try. We'll do a free buyer interview for one of your deals. Visit freebuyerinterview.com now to claim your free interview. That's freebuyerinterview.com now to claim your free interview.
Okay.
Asad, how are you?
I am strange. It's a strange feeling. I was in the gym. I had a really intense workout, but I was listening to Eckhart Tolle while working out. And so I feel pumped and zen at the same time. It's really
You're
weird.
Here now. Are you present? Because there's the only thing that ever exists is the present. The past and the future do not exist, my friend.
All stress is the past and the future. The
Exactly.
present is
It's the egoic mind trying to take you out of this moment.
Oh, now I like every time like my brain starts thinking about the future, I just try to take deep breaths and stay in the moment, and I suck at it. Like I'll just be honest.
God, I was so I came back from Guys Weekend 23. Amazing. Perhaps the best Guys Weekend. So just so amazing. Just it was 10 of us. We go to the same house. It's just 4 days when you can disconnect from the troubles of your day to day. People hold you in unconditional positive regard. There's only love and support. Everybody's cheering you on. And we cook amazing food, and we went on this great run, and we went tubing, and we went hiking, and we played throw the ball in the air and try to catch it as you jump into the pool, which is a very fun game.
That is a fun game. Kind of dangerous, but fun.
Dangerous. Is the Canadian version dangerous?
Yeah, it's not very dangerous, but and so you drive back and you're totally blissed out. You're just like, oh man, that's what life is. That's the good things of life, is these people that I've known for 30 years that love me and I love them. And then as soon as I got back to work on Monday, it was like a fucking bus crashing into a wall. It's like, oh my God.
You know what I love about those drives? Like when you're coming back from a cottage, you're like, this feeling, I'm going to carry this forward for my entire week. This is me now. And then like Monday at like 11:30, you're like just sweating and stressed out. It's amazing how fleeting that moment is.
I felt so, we talked last week. I'm like, I'm committed to being happy no matter what. And this week, I'm feeling good today. If you had asked me yesterday or Tuesday if we were to record it, then I would not be present. I was in a very different frame of mind. I'm coming out of it now, and I feel better.
I guess
isn't it interesting on day to day how that works for us? Like we have to pick the right day to do the recording, and then have these conversations. It's great. I mean, I'm in the same boat. If it was yesterday, tough. Today, perfect.
Yeah, yesterday was really bad. But I think this is the interesting thing about it. It also kind of forces you to figure out a way to like reset quickly. And so we like the three of us don't reschedule often, right? So it's like, it's really not common for us to be like, let's move this because I'm not feeling good. So we just have to find a way to be presentable in the moment. And that I think is an interesting level of pressure to have, because it forces you to learn how to do that. Yesterday was horrible for me, but then I stepped away. I went and I had a workout, and I wasn't back to normal, but it was definitely a lot better. And those are things I've only learned because of doing this.
100%. Yeah, no, that's because I was so zen last weekend. I was like, I got this. This, like you said, Asa, this is me now. I'm a very calm, relaxed person. And so coming out of the last weekend, we started this gratitude group. So we have this WhatsApp group, and it's a bunch of, and everybody wakes up every morning and it's like, here's what I'm grateful for. And a couple of my friends were still in that zen moment. They're like, I'm so grateful for you. I'm grateful for everything that I have with my friends. And I'm like, I'm just struggling right now. I guess I'm grateful for my dogs. I'm grateful to not be dead. I'm grateful for oxygen and like like I was like, I don't
feel basic shit. I'm glad I can walk. I'm breathing well.
Exactly. Why don't we dive into the docket? You are the curator of the dockets. First thing we're talking about is the market, right?
We are jumping into the market. So it's a really interesting thing. So as operators, the three of us, our listeners, essentially anyone in a leadership position, you have to forecast and predict what might happen in the near to medium term. And you look for these signals in the market to help you make your predictions and then invest resources accordingly. So it's important to look for all these new signals as they present themselves. Right now, it's really interesting because there's some information that is super positive and then some stuff on the other side of the spectrum. So on the positive side, there are a few things. Inflation is down to 3%. We've discussed it a few times. We said that they'll only probably increase rates once or twice more, and then they're done. They did one more. They've indicated they're done. The jobs report that came out after gave reason to believe that this soft landing is about to happen, because what we need is for demand for labor to cool down. We actually don't want unemployment to go up. That's a second order effect and is bad. We just need demand to cool down so wage inflation goes down. It happened. Jobs are down to 9.5% from 12 million at the peak. Voluntary quits are down to 2.4% from 3% at the peak. Powell has now come out and said, I believe the 2% inflation number is possible without a broad-based recession and layoffs driving up unemployment. Really hard statement to make, because how do you walk it back, right? So you have to be very confident when you're making it. The S&P is up 19% since the start of the year, driven mainly by the Magnificent Seven. And then now the other 493 companies are popping up as well. So lots of reasons to believe that the soft landing will happen. And this is called an immaculate disinflation. I learned this today. It's a stylish term, and I think it's a more stylish thing to achieve. So that's really cool. On the other end of the spectrum, you've got Fitch yesterday downgraded the US rating from AAA to AA. They said, and I quote, the expected fiscal deterioration over the next 3 years, a high and growing general government debt burden, and the erosion of governance compared to peers over the last 2 decades that has manifested in repeat debt limit standoffs and last-minute resolutions is the reason for this. And they cited recession risk. Buffett came out today and said, and I quote, there's some things people shouldn't worry about, and this is one. Others in his camp are going to say these are the same people who gave Lehman a AAA rating in 2008. But the market reacted. The S&P was down 1.3% on the day. Sam, how does this make you feel about the near term, medium term, and long term? And do you agree with this downgrade, or is this an insignificant organization trying to be significant?
Wow, master.
What's up?
You are good at what you do, Professor Zaman. Here's what I think. I think we've talked about this a lot. I think, I distill everything down to our little corner of the world, which is the tech economy. And I think from everything I'm seeing, what did we say? We said it's almost over, but it's not over. I feel that very strongly. I think we are 3/4. I've had a bunch of calls today, and what I've said is I think we're 3/4 of the way through this recession, this tech recession. But 3/4 is not 4/4. It is not. And so there is a quarter left. I think, if we say that this started really about the summer, maybe the early, late spring of 2022, and it's about 18 months long. And when I look at, and when we're doing our modeling for Pavilion, what we see is that things for us will probably improve beginning March or April. That's when I think things will begin when we will notice the material improvement. I think, to your point, Asad, I think we'll see some better signs December, January. I think February will be slow, but then March, April comes back. But that's we're in August, right? That's not anytime soon. That is 9 months from now.
Yeah.
And I think it's very weird because the weather on the East Coast has become really beautiful all of a sudden. And so it's really weird to be walking out in the sunshine and this beautiful weather and thinking, this is it. Like, we are in it. We are still in it, and it's not over. And I don't, and again, some of the people that I do this podcast with, everybody that I'm talking to is not saying everything's going great. What I'm hearing is layoffs. I'm hearing down rounds. I'm hearing people cutting the size of their, and we'll talk about that later on the docket, but funds cutting back the size of their targets when they're fundraising. So regardless of whether it's 70 degrees and sunny or not, it's sort of a weird feeling to feel like after we record this, I'm going to go out for dinner and I'm going to try and find some optimism, and I'll watch Ted Lasso and finally, finish season 3. But meanwhile, we are still in a really, really difficult environment. And, we had a pretty tough July at Pavilion after having a really strong June. And we're scenario planning for the next 7 to 9 months and thinking about, okay, if things line up this way, this is what we're going to do. And if they line up the other way, this is what we're going to do. So what I think is the message, the song remains the same, which is survival through February, March of next year. And I think it's going to be tough. And I think it's going to be a tough fall. And I think we've all got to band together and support each other as much as we can. And I think checks will start to be written, to the extent that we're over concentrated in the tech ecosystem. We'll see the green shoots really in Q1 of next year.
Yeah. 252 days, Sam. That's 9 months is 252 days. So
it's a long time.
This is the roller coaster every day. Every day we just gotta buckle up, my friends. And I 100% agree with you. I see it as well. See it in my friends' conversations and what they're doing and how they're feeling about the world. And we're just like continuing to push forward, continuing to support each other. That's all we can do, is understand what our challenges are and play therapy to each other. It's a good thing, but I appreciate your enthusiasm each week and your optimism, Asid, in terms of the S&P. I really do. It's the thing that brings me joy. And I do appreciate the downgrade piece of it is this doesn't mean anything by Warren Buffett, because
he just brushed it off. He's
would look at that and just be like, oh.
As you guys were talking, something I just realized was that, you can't have resiliency without adversity. And once you've felt pain for quite some time, you become a little bit more comfortable with it. There was a period in this downturn at the start where people were very scared to say that they were struggling, that their companies were struggling, that they were thinking about doing layoffs, that things were hard for them, that they were emotionally and mentally going through something. And I feel like now when I have the conversations, everybody is a lot more comfortable about just being open and honest. Doesn't mean everybody is doing that. There are always cases where somebody makes it seem like everything is up and to the right, and then you speak to somebody else in that organization, and that's not the case. But more and more people
Some of the guests on our podcast have been like that.
Oh my God, Sam. Good grief. I was lightly, you just went for it. It's so interesting, right? Have you noticed that? Have you noticed people are becoming more comfortable with just talking about it as it is versus posturing, Sam?
I've noticed that a little bit. I think to AJ's point, I think in general, what we really have to endeavor to do is try and resist the temptation to say we just got to get through it, which is really, really hard, right? I feel like we can't white knuckle our way to growth and to success and to survival. I think but it's really freaking hard because it's been going on. Again, we're past, if it started in Q2 of 2022, this is now 15, 16 months. And again, as I said, I think it's going to be another 7. So it's going to be about 2 years of really difficult time. And this idea, sometimes when you face adversity, it's this idea it'll just be over tomorrow. Just sit tight, it'll be over tomorrow. And there's that moment, to your point, also, when you realize it's not going to be over tomorrow, and it's not going to be over the day after tomorrow. And there's going to be pain and suffering between now and when and that's where, again, in my mood now, if you had asked me Monday, Tuesday, Wednesday, but in my mood now, I'm thinking, okay, well, how do I make the most of this opportunity? How is this the challenge? How is this life trying to teach us all something? How is this all becoming stronger and better and more resilient? And sometimes I feel it, and sometimes, and sometimes when I'm just lost in the future and the past, I don't. So yes, do I feel like people are a little bit more open? I do. Feel like there's a bunch of people that are still actually doing quite well and that are
always.
But even I'm just thinking last night, I mean, the conversations are just wild because there's been this shift, and I'd love to, obviously want to hear from AJ, but there's been this shift of it in coming out of 2021. There's, how wealthy am I going to be? Am I going to be worth $500 million?
How cool am I?
Right. Yeah. And everybody was thinking that, right? Everybody was in that space. And then I was literally at dinner at the bar in Sag Harbor with a great friend of mine who we all know, who was exactly the same mindset I've heard from many other people, which is I'm trying to think if my equity is going to be worth anything at all. And they're growing. That company is growing this year. But he said every direction, every metric is moving in the wrong direction. And I am, the chief revenue officer. And I wouldn't be surprised if the founder came to me and said, for what we're seeing, doesn't make sense to have you be part of the company. And he would say, and I would agree with that person if they said that to me. And I would just say, please be a good steward of my equity and try to make it worth something. And that's that. But
Sam, you said something
a
while
thing to say. So tough to say that out loud. Sam, we were in Sag Harbor last year, May. We were on a boat, and I was having a conversation with a founder we all know, and he was thinking about selling his company. He was younger, and we were like, I remember saying to him, you should do that. You should 100% do that. He had an offer. Don't know how real it was, but I had caught up with him last week, and it's a totally reverse conversation. Customers aren't paying their invoices, and he has a cash flow crunch, and it just sucks. It's like there's nothing you can do about that. That's so frustrating to have that, and you have to you have this roller coaster. And he is in a business where cash flow is everything for him, and like customers not paying big invoices, $75,000, $100,000. Like, how do you deal with that? Like, you're going to bed thinking like, how am I going to pay my team?
But like if I was to explain these things to my father, like who was in business in the previous generation, he'll just be like, this is business, dude. Like you were in a particular gold rush and you were enjoying the benefits and the upside and the peaks of a gold rush. And these are problems that you have to deal with. Most people in business deal with these problems regularly, like, people not paying on time, people not paying, all those things are normal. So there's like those people that'll say, this is the way it usually is. Not as bad as this, but these are common issues to have to work through. Sam, you said something a while ago that I think is important, which is that equity's value only matters if you're looking to sell today. And you would be unless you have existential risk and your hand is forced, most people don't have to sell today, right? So the market will improve. Now, I spoke to somebody who got a $150 million offer in 2021, said no because they wanted $250 million. That business is doing $7 million this year and will be worth less than $7 million. Maybe they'll get a 1x multiple on their revenue because it's services. And that sucks. And if they want to
got a $150 million offer and it's worth less than 7.
Yeah. Sucks, right? If
they had like a 100x basically multiple on a services business. How is that even a thing?
No, it wasn't 100x multiple. They did 30 to 40 million. They did between 30 to 40 in the market. So they got like a 3x multiple on revenue, essentially, or 4x. The
revenue's gone down to 7.
And now the revenue is down to 7, and you're not going to get a very exciting multiple, especially if it's a down, if revenue is down by such a margin. So the business is worth nothing. They thought they could wait a few more quarters, get revenue to a point where they could get this $250 million sale, right? And now they can't. Obviously, they can't. But it only really matters if they try to sell today. The market will improve, multiples do come up, revenue will go up. And so it's like, if your hand isn't forced, then that thing shouldn't be in your head so much about like my equity and my equity's value. Those things move. The discount cash rate evolves based on interest rates. So it will evolve as these rates come down.
Today's business landscape is full of uncertainty, and succeeding as a go-to-market leader has never been more challenging. Pavilion is here to provide you with the education, support, and resources you need to grow, learn, and unlock your full potential. Join more than 10,000 of the world's leading go-to-market executives in a private membership community designed specifically to fuel your success. Visit joinpavilion.com and use the code TOPLINE20 to get 20% off your membership. That's joinpavilion.com, and the code is TOPLINE20 to get 20% off your Pavilion membership. And now, back to the show.
Yeah, but also Sam's point is on executives, not founders and CEOs. Like, we deal with it because we kind of understand this. But if you're an executive and you're sitting out there and you're underwater, like all of ours are, like, or all of them are, like, that's a different scenario.
Yeah.
Like, this is a little bit different. How should you be thinking about it then?
Well, I also think, Asad, that I think there's way more existential risk than you're acknowledging. That's the issue. I think that there's lots of companies. I don't think it's academic for most people. I think that's the point. That's what we've been talking about. That's what this Q4 is all about. It's not academic. It's this particular company that I'm referring to from dinner last night. They did a round 2 years ago, but it was structured in almost like an LBO style. So they have a lot of debt on the books with interest and debt service that they can't really meet.
And they have to pay, so they have to go more than cash flow positive, right? Because they have to pay that. They have to have positive EBITDA in like the multiples of millions to pay that back.
Correct. And then if you have other businesses that, again, so that company that didn't want to sell for 150 because they wanted to get to 250. I bet they staffed up. I bet that they probably invested in some product lines or some service they did some things that they weren't. I don't think it's that easy to be like, okay, we'll just be profitable now. We'll cut. Well, who are they going to cut? There's probably a point at which, and then it depends, but certain companies, who wants to be the last customer into a company that's going to go out of business? So there's this reputational risk where when you're seen to be cutting, that probably impacts new customer acquisition as well. So I just think, God, this became a depressing show, but I think that there's more existential risk than we think. I think lots of companies were spending more than they make. And if they're shrinking as they're trying to cut, right? Like, it's one thing to cut. We're going to cut to get to break even. But if you were assuming that you're going to be at X to get to break even, and now you're X minus 10% or 20% or 50%, well, then you got to cut even further. And pretty soon you're like, well, what is this thing? What is the company itself if I have to cut so deeply? And does cutting even make sense? Because you really can't cut your way to growth. You can't contract to profitability unless, I guess, you fire all people that aren't talking to customers, which might be firing your product and engineering organization. But those are the people that are building the things for the next group of customers. I don't think it's very easy.
I think you hit the nail on the head. There is a point at which revenue starts dropping further and further down, and you have to cut further and further down, but there are no more places to cut. One of the things that this has probably led to in terms of a conversation in the market is around strategies to like create demand right now. So there's this conversation happening around outbound is dead, cold calling is dead. I feel like that's always a conversation. There's always somebody saying cold calling is dead. And then there's a lot of people that are saying, well, the way to drive demand now in this moment where people don't want to buy, don't want to spend, everybody is struggling with churn, everybody is struggling with new business, is by really doubling down on near-bound / partnerships and referrals. AJ, like, let's get tactical for people a little bit. Like, how do you feel about that when you think of ways to drive demand right now? What are the things that you think are working versus not? Or is the answer way more nuanced than what people make it out to be on LinkedIn, which is that what works for you might just work for you, and what works for somebody else works for somebody else. It's different business. I feel
like when we first started this, it was talked about partnerships and doing all bound or near bound type of channels, and people tapped into that, but that was a short-term boost. Unless you have like long existing relationships and your HubSpot example, or Salesforce, and like you've created that, you have to hire a partnerships person to really do that. And if you're an early stage startup, putting that type of investment, especially now, is really challenging. There were a lot of CEOs that did this, that we heard a lot of positive on it, but I would say that demand is like will dry up pretty quickly. It's a little bit more of a growth hacking feeling to it. I would say events are something that I think this fall will be interesting to see. Sam.
I'm happy to hear that.
Yeah, I mean, it's true though, right? You have SaaStr, you have Inbound, you have GTM Enterprise. Like, what are we expecting to see in those connections this fall as it relates to pipeline? Because the fall is a big events. Like, I actually am encouraged. I'm optimistic. I haven't read anything on Lemkin on how he's thinking about SaaStr and pipeline, but it feels like that they're full, like they were last year. I'm intrigued to see if that's the case and the type of conversations that will pipeline.
I'm sure that I've heard that his ticket sales, I think attendance will be strong. I think sponsorship revenue has got to be off 50%, if not more.
Yeah.
50%.
They were, oh, sure. If not 70%. They were minting money. I think they had three salespeople. I mean, one of them is working for us right now. They had three salespeople, and I think each of them made more than $1 million, and each of them sold $10 to $15 million worth of sponsorships. That's not happening this year.
Yeah, that's not happening. So the market is changing. So tech is going through this recessionary period right now. It's still going to be painful for 6 months, 9 months, something of that sort. But there seems to be a reset happening in the VC world as well. And so,
Asad, you are a king moderator today.
What's up, guys? Like, I've been here all the time. You guys
he's making up for the total like slacker that I am today.
He is driving the conversation. He's got these canned transitions. AJ, what do you think?
I mean, yes, I got the one call out. Usually that really good question at the beginning was a master class. Asad and Sam, you just crushed that.
So here's the thing that's happening. In tech, there is a reset, but there also seems to be a reset happening in the world of venture capitalists. So there are a few things that have come up in the last couple of weeks. The first is Sequoia, I think I pronounced it right, announced the departure of 5 partners, 3 senior, 2 junior. Pro2 raised a $330 million early stage fund, which was 34% below target. Tiger and other large firms who shall not be named because I like them, had similar challenges raising. I'm still surprised that Tiger was able to raise anything after the performance of their last couple of funds. And then Sequoia, this is really interesting, they cut part of their platform teams. And for our listeners, basically, all VC firms charge a management fee from their LPs when they take money. And then they also get a cut of the upside from their investments if they generate any upside. If you're a large firm with a large fund or multiple large funds, you have lots of management fees, and you can use them to create what they call a platform team, which is basically a support infrastructure where you support your portfolio companies with recruitment, marketing, sales, etc. These are cost centers, and they're being cut down. Sequoia was the first to do it. I then went and did some research for us, and I found that. Look at this. So Sequoia has 700 employees. 90 of them on LinkedIn are open to new opportunities right now.
Wow.
61 out of 700 at Andreessen are open to new roles, and 88 out of 500 are open to new roles at Iconic. And so that's really interesting. There seems to be a little bit more anxiety in the VC world than before. Usually they're not the ones, looking to get out the same way people are in companies. The reset makes sense because the returns from 21 and 22 are going to be horrendous. And then the All-In folks spoke about this in their last episode, and they focused their discussion on the fact that there are too many investors who have no operational experience, making bad investments, not giving good advice to founders, and making problems for everyone. There are examples of legends in the VC space who had no operational experience, like Bill Gurley and Mike Moritz, but they seem to be the exceptions according to these guys. Sam, do you think that investors need to have operational experience, or were the All-In folks just talking their book?
They were talking their book. They are wrong about that. There's no, if you want to show me data, I'll happily look at data. There's a couple, but for a few different reasons, I do not believe that. Well, first, factually, who are all of the investors that we all know about? Okay, except for Mark Andreessen. And Ben Horowitz, right? But and again, you can say John Doerr worked at Intuit or whatever, but like really Fred Wilson, Bill Gurley, Mike Moritz, John Doerr, not, and Jason Calcanis he worked as a reporter or something like that. It's a very big
media
stretch.
guy.
Yeah, he doesn't have operational experience, no matter what he says. I'm sure he doesn't listen, so it won't matter to him when he hears this. But I don't. My personal experience is that, and Fred Wilson's written a lot about this. I think it's about picking the right horse. I don't think it's about the level. This might be heresy what I'm about to say, but again, these are hot takes. I don't think you need operational experience. I don't think operational experience is particularly beneficial. I don't think I would be a good investor, just like I don't think an investor would be a good person to run my company.
I mean, it would hurt us. It hurts us, right? We're optimistic by nature. We're going to think everything is golden. And I don't know. I get pitched all the time like, oh, this is a great idea. Now, not so much. Today, not so much.
Exactly. And there's so much math involved in investing. It's really about portfolio management. It's about sizing the portfolio, making sure that it's about riding the winners. I love this only from listening to Fred Wilson, who's never worked at anything besides VC. And he is the best investor that I'm aware of, again, besides Bill Gurley and maybe a few other people.
He has better returns than all of them right now.
Yeah. So my perspective is I would love to say you need operational experience. And that doesn't mean that VCs give great advice. I think actually the point is their advice is really irrelevant. I don't think it's about advice. I don't think portfolio support, somebody would need to show me that portfolio support correlates to returns. My guess is that what really correlates to returns is sizing your bets, entry point and exit point of, meaning price, buy low, sell high, and picking the right companies and the right founders. That's my guess is that's 80%. 80% of all returns is just picking the right. Now, I don't know. What do you think? AJ, what do you think?
Well, I had an exit last week. So one of mine, I get a positive return on one of my deals. So I'm pretty positive. Paperspace sold to DigitalOcean, public company, and the cloud compute. But you're factually correct here, Sam. Of course you are. I think we have this just general feeling that we as operators are know what we're doing all the time or don't know what we're doing all the time, but we can give advice and we can talk to it. So when we have a founder pitch to us or someone talks to us about their business, it's really easy to get sucked into it. And the more we get sucked in as founders, the more we think we operationally can understand it and can oh, I'm going to invest because I can give this person advice. We did that. I mean, I don't know. I've done 20, 25 angel rounds and startups from 2018. I'm in the Series A of SeatGeek. That's one of the ones that eventually, hopefully, will turn. Yeah, that was a 2015.
It hasn't yet?
No, it's supposed to go public in March of 2020. That didn't work out so well, unfortunately. But yeah, I go ahead, Sam.
No, I mean, I've been talking a lot this episode, but
no. I think I don't know. I think what we're really talking about here, Sam and Asid, is what happens? What happens? We are not market predictors. I think we should all take Warren Buffett's advice and chill. It doesn't matter.
Fundamentally, I read a long time ago, Fred Wilson has always said capital is not the main constraint to company formation. And there are a set number of good companies that emerge every year, and it is a limited number. And that is why VC is a craft business to the point of David Sachs calling it craft ventures. Yep. It is not a scale business. It doesn't matter if SoftBank raises $1 billion. That's not going to correlate to returns by and large. And the constraint is not capital. And that VC as an asset class, it's probably the returns, like anything, are going to be chased down. There's going to be an inverse relationship between assets under management, total assets under management in VC, and returns.
I think what's happening is that they are conflating what it takes to win good deals versus what it takes for companies to do well. I do think when founders are deciding between various VCs, they're considering does this person have Do I feel like they'll give me good advice? Do they have a support infrastructure for me to tap into? Are they giving me a good valuation, etc.? But once you're in that deal, the power law applies. 1 of 10 might make it and make it big, and most will fail. And the ones that make it didn't make it because you had a good board meeting, I think. They made it because those founders are really good. They build great teams. They have the right product. They have a big TAM. They have a super cycle
sustainability. Yeah, they continue to figure out problems. They continue to dig. And every single day, they're just like, you know what? Keep the eye on the ball. Keep looking up at the Alps. And keep your eye on the road ahead. I think we're talking about the right things. And so each week when we come into the week and we're taking day by day, every day is a new day. That's what we have to do for the next 9 months, 252 days, 36 weeks that you're talking about.
I think the skill of a great founder is institutionalizing knowledge to enable scale. And I think that is why, if there's a reason why I am not a great founder, that is key. And what I mean by that is that I'm discovering all these things at Pavilion that we used to do that we don't do anymore. And I'm like, why the frick don't we do those things?
It's Sam, don't be so hard on yourself.
But actually, say more. That's really interesting. Well, give us an example. That's fascinating.
A million things. We used to send a welcome video to everybody that joined, where we would clarify that, hey, these are the values of Pavilion. This is why we expect you. This is how we expect you to behave. We expect you to be engaged. At some point, that just stopped happening. All of a sudden, that's not the only reason people are less engaged, but I don't know why we stopped doing that.
Yeah,
we had this whole playbook that I wrote. I was rereading it the other day about chapters and how to build a chapter. And now we're trying to recreate it from scratch. And I'm like, well, we should use this thing that I wrote years ago.
What is old is new again, as you said. Yeah.
But and then I had this super cool call with a member in Singapore, and she's been at Cloudflare for 6 years, and she helped start is it AJPC? What's the new acronym for APAC? I don't know what it is. APJC?
There's a new acronym?
Asia Pacific, Japan, China. So APJC.
Didn't know that.
And she was one of the first 6 people that started their Singapore office. There's now a couple hundred people. They were doing 30 million in ARR. Now they're doing over $1 billion in ARR. And I'm like, man, the people at Cloudflare, they were just, how do you learn how to start an office in Singapore and scale it up? And how do you learn how to do that? And it's this process of making sure that the thing you learn isn't forgotten. That is my insight for the day. And the people that are really good at enshrining institutional knowledge in process, in systems, and in people, enshrining it so that you don't come across a problem that you had already solved 3 years ago, and and all of a sudden you're making up a new way to solve it, as opposed to, no, we know how to do that. We do that. It's in the code. It's in the code base. It executes every time. And that's something I want to get better at.
I think that's a brilliant point. I like it because I've noticed the same shit here, where there are things we used to do brilliantly. Why aren't we doing them? And then we're kind of dealing with the challenge of not doing them. And we're thinking we're coming up with a new solution for this thing, but we're kind of scratching at the same thing we used to do. That's fascinating. Okay, we're almost done, guys. Shout out time.
Shout out time. You are the new moderator.
Time.
Look at this. AJ, you start.
Oh, I got to shout out to you guys for dealing this craziness for the call today. But Nancy Aloha, she's a Pavilion member. She's a CMO. She just moved back from Finland after being there for 13 years. I met her last night. She was awesome. She was among all the CROs and held her own. And I had a lovely conversation with her. So I want to give her a shout out. Sam, great work on the Pavilion membership. Nancy was awesome. Thank you, Nancy.
Oh, good. I'm glad Nancy was awesome.
Nancy from Finland. Shout out to you. Okay, I'll go next. Sam, you ended as always. Everyone's talking about Oppenheimer and Barbie. And there's a show I'm watching that I think is brilliant that people should watch, which is called The Crowded Room. This is Tom Holland, and the show is about multiple personality disorder. And it's essentially about this kid who was abused when he was young quite badly, and his brain created these personalities as a self-defense mechanism. And then those personalities would take over and do all sorts of wonky shit, and he got into trouble with the law. And so his lawyers it was the first time lawyers tried to use MSD as a defense for a crime. and they set the precedent. It's based on true events, but not a true story completely. And it's just when you see the acting in it, so he has taken a year off after doing this show because of the impact of playing this character had on him. And when you see it, you just realize like these are such important shows. They bring such interesting things to light, but to do them well, a person has to give such a big part of their soul to it. We saw it with Heath Ledger in that Batman movie and so many other people. And so it's just really inspiring to see people find something that they're willing to give so much of themselves to. And so that's my shout out.
I love that. That's a great shout out.
You were skeptical initially.
No, well, I keep scrolling past it in wherever, Apple Plus or Disney or wherever it is, because I've been trying to finish Ted Lasso and then been watching Silo. I'm gonna give a couple shout outs. First, I want to shout out my boys, my friends. I might not remember everybody, but Andy Neiman, Matt Fenwick, Aaron Romarenko, Brandon Beauvais, Mike Alexander, Eric Johnson, John Hastings, Derek Douglas. I think that's everybody. Was that 9?
One person you missed is going to be really
Oh my God, Aaron Romarenko. I think I said Aaron Romarenko. Anyway,
You said
those are my buddies from Guys Weekend. We've been friends for 30 years. And Scott Harris. Sorry, Scott. That was the person I forgot. And Aaron, Scott, and Matt and I are in a gratitude group every morning. And I just appreciate you guys. I love you guys. Thanks for your support. And then I want to give a book recommendation. I've been telling people about it. I told you about it yesterday, Asid. It's called Killers of the Flower Moon. It's the new Scorsese movie with Leo DiCaprio. It's about the horrible treatment of the Osage Indians and how they ended up sitting on a plot of land that ended up producing tons of oil. They became multimillionaires, and then there was a murder conspiracy, and many of them were murdered as the white people in town tried to steal their money from them. And it was really the early formation of the FBI. J. Edgar Hoover sent a lawman named Ted White into Osage County to solve the crime, and he did end up solving the crime. And I forget the guy's name, but it was the patron of the town, sort of the unofficial mayor, that actually had been the bad guy. That was sorry, spoiler alert. I shouldn't have said that if you're going to see the movie. Anyway, it's a great book. It's a page turner. It's a true crime book, and it's fantastic. Killers of the Flower Moon. Check it out. You'll enjoy it. Okay. Other than that, that was our show. AJ, enjoy the Yankees game. Asa,
I'm going to.
I hope you have a great evening. Thanks for listening, everybody. This episode was brought to you by Close, which helps organizations improve their sales win rates, build better products, and consistently uncover the real reasons they win and lose business. Visit freebuyerinterview.com to learn more. Closed, freebuyerinterview.com to learn more. Win-loss analysis is incredibly important. So thank you for listening, and thanks to Closed for sponsoring the show.
Thank you for listening to this episode of Top Line. To learn more about the trends, news, and developments impacting the world of B2B SaaS, head to joinpavilion.com, where more than 10,000 of the world's top go-to market leaders go to achieve and unlock their full professional potential.